Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Neuberger Berman Global Equity Megatrends Fund. Neuberger Berman is a US-based investment management firm founded in 1939 by Roy Neuberger and Robert Berman. In 2003, Lehman Brothers acquired Neuberger Berman alongside with several other asset management firms, including Lincoln Capital Fixed Income Management and the Crossroads Group. As most of us remember, Lehman Brothers collapsed and went bankrupt in 2008 during the global financial crisis. Lehman Brothers originally planned to sell off its asset management businesses, but Neuberger Berman's management counter-offered with a management buyout. As a result, Neuberger Berman integrated with Lincoln Capital Fixed Income Management and the Crossroads Group and spun itself off in 2009, with the new entity retaining the Neuberger Berman brand name. Neuberger Berman focused on maintaining as an independent and privately owned business, steering towards employee ownership. The firm achieved 100% employee ownership in 2014 and has been maintaining it since then. Today, Neuberger Berman is one of the rare asset management firms globally that is fully employee-owned and links compensations with the strategies and products it offers. This ownership model also promotes high retention rate, with the firm having over 95% senior investment professional retention rate over the recent years. As of end 2024, the firm is owned by about 800 employees who comprise about 28% of the total staff strength. Neuberger Berman manages over $500 billion of AUM as of end 2024 and houses over 2,800 employees, of which 760 are investment professionals. Global presence is high as the firm has offices in 26 countries. Client breakdown-wise, about 70% are institutional investors and about 65% are US-based. Neuberger Berman's product offerings are quite well diversified, with about 27% of AUM in equity solutions, 39% in fixed income solutions, and the rest in various alternatives and private markets offerings. The firm primarily offers actively managed solutions, though there is intention to increase efforts in passive solutions in recent years. The internal business structure of Neuberger Berman is a bit complicated. Within Neuberger Berman, there is a NB Private Wealth Group that provides US-based investment and wealth solutions, managing about $80 billion of AUM. NB Private Wealth is made up of 43 advisory teams, each covering different types and areas of investment or wealth solutions. One of these teams is called the Paduano Group, formed by Daniel Paduano over 30 years ago and specializes in global equities. The team started managing the Global Equity Megatrends strategy in 1991 and is today a team of 4 experienced managers located in New York, averaging 32 years of industry experience and managing about $1.7 billion of AUM. Daniel Paduano is obviously the most important member in the team. He spent nearly half a century in Neuberger Berman and is clearly highly experienced in equity investing. While his age is not disclosed and he looks to be still going on strong in video interviews, his eventual retirement and succession plans in the future years will be something to note for investors. Cheryl Aston is the next most senior member in the team, having nearly 30 years of industry experience and almost all of it in Neuberger Berman. Maximiliano Rom joined the team in 2017, but prior to that spent about 10 years corporate strategy and corporate development in Neuberger Berman. Jason Vintiatis joined the team in 2013 and brings with him small caps expertise from prior investment firms. The Neuberger Berman Global Equity Megatrends Fund is a sub-fund under the Neuberger Berman Investment Funds plc fund family. This fund family is set up as an Irish ICBC company structure and is UCITS qualified. Singapore-wise, the fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The Neuberger Berman Global Equity Megatrends Fund is a featured fund in the Singapore website and has its own marketing webpage and placemat. These marketing materials provide the 9 key megatrends that the fund is focusing on. A slightly dated intro video found in the Paduano Group webpage gives more color on what these 9 megatrends mean and what are the types of companies the investment team is looking for. The placemat also has some key fund highlights, where it states the fund is a high conviction, concentrated global equity portfolio of 20 to 30 holdings that are very differentiated from the benchmark. It is also stated that the fund runs a disciplined valuation approach focusing on downside protection, and that it has a long proven track record, which we will explore later. The overview paragraph in the fund webpage is a shortened version of the investment objective found in the fund fact sheet. The essence is similar to the key highlights stated in the placemat, so nothing new here, but at least the marketing taglines are consistent. To find out more, we'll need to dig into the fund prospectus. The first paragraph in the prospectus supplement provides the scope of the investment universe. Here, it is clearly stated the fund can invest globally and across all market capitalizations and industrial sectors. The next section provides details on the investment process, which starts with a top-down macro view to identify long-term secular themes. This is followed by in-depth research and analysis on companies that operate within the themes. Thereafter, there is a quantitative screening to filter for companies with high return on equity and cash flow strength. The sequence here looks a bit wrong, as it is more common to conduct the quantitative screening first to reduce the investment universe, then spend the effort to do the fundamental analysis on the filtered list of companies. In any case, the last round of filter looks for companies that have at least 50% price upside over 3 to 5 years, and as part of the process also determine both the entry and exit price targets. With specific price targets, this importantly differentiates the approach from some other funds that would invest in companies like long-term shareholders without a clear exit discipline. The intro video from the Paduano Group webpage gives a nice graphical summary of the process. Coming back to the supplement, the next few paragraphs provide a bit more elaboration on the investment process. It is stated the identified themes are expected to have a minimum time horizon of 7 to 10 years, so the list of themes that the fund adopts should not change often. There is also a bit more details on the fundamental analysis of the companies, where they should already be industry leaders, and the investment team will evaluate the quality of the products, technology, processes, and market access. In-person meetings with senior management of the companies are stated here, which should be an important process. And again, it is stated clearly that the eventual portfolio in the fund will be a highly concentrated portfolio of 20 to 30 stocks. The next few paragraphs talks about diversification of exposure and assessing the China A share market, which are not too useful. This is followed by the benchmark section. The benchmark used by the fund is MSCI World Index, and it is stated the fund is not constrained by the benchmark in any way. I think this is not really a suitable benchmark for the fund, and I will talk more about that later. There are several more sections in the supplement covering more details on access to China market and general investment risk and ESG, all of which I think are not worth covering here. There is, however, one section covering investment restrictions that is useful though. In this section, it is stated the fund will not use swaps or lending. It is good to state this clearly, as some mutual funds do not really disclose whether there are any leveraging done in the portfolio. With all this information, let's see how the actual portfolio turns out. The Neuberger Berman Global Equity Megatrends Fund was launched in 2018 and today has over $600 million of AUM. This is a relatively small size compared to other established global equity funds in the market, so there is definitely much more room for the fund to grow. The way the fund presents its portfolio in the fact sheet is rather different from the usual equity funds. Missing are the geographic and industry sector breakdown. Instead, the fund provides revenue distribution by geography and simply splits by US, non-US developed, and emerging markets. Also provided is the breakdown in accordance to the 9 themes that the fund tracks. What we can gather here is that the fund at least looks diversified from revenue distribution perspective. Looking at thematic breakdown, we can get a feel there is a focus on technology through smart systems and personalization of media themes, followed by probably consumer discretionary through evolving global consumer theme, and also energy and infrastructure through energy efficiency, energy infrastructure, and rising value of water themes. The fund currently has 24 holdings. Top 10 holdings comprise about 54% of the portfolio, which is lower than I expected considering this is a highly concentrated portfolio. Interestingly, the fund provides a fund-to-benchmark comparison of the top 10 holdings from both the fund's perspective and the benchmark's perspective, which serves to show that the fund is having a very different portfolio exposure compared to the benchmark. Indeed, given megatech names have been so popular in the recent years, the only one held in the fund is Alphabet. One position that I am concerned about is Alibaba ADR, which is the top holding in the fund at about 7% exposure. While Alibaba is indeed a decent company that serves to represent technology and consumer-related themes in China, there are increased concerns and uncertainties resulting from the current US-China trade war that may negatively impact this position. So it is worth observing how the investment team would manage this exposure going forward. What all this translates to is an interesting portfolio that looks to be undervalued by the market, but with strong fundamentals and high free cash flow when compared to the benchmark. In other words, this is a portfolio with companies that have better potential to grow than the broad market. This also translates to a near 100% active share for the fund, which basically means the fund is almost completely different from the benchmark, which is MSCI World Index. And the only way to be different from the benchmark is really to avoid the large cap names and go for the small and mid cap names. As seen, the fund's weighted average market cap is way smaller than the benchmark. So that leads us to the question, if the fund is expected to invest mainly in global small and mid cap equities because that's where the biggest potential for enablers of new themes are, then should the fund use a more relevant benchmark instead of MSCI World Index? Morningstar actually does exactly this in its categorization for this fund, which I think is more appropriate. This issue has a direct impact when assessing the fund's performance, which we will go through in a while. The main retail share class offered by the Neuberger Berman Global Equity Megatrends Fund is the A share class. The fund offers only accumulation share classes. While the fund has also Euro and Hong Kong dollar share classes, only the base US dollar class and the Sing dollar hedge class are registered in Singapore. A US dollar class was launched in 2018, so that gives us about 7 years of track record. Not too long, but decent enough for us to do some performance assessment. A Sing dollar class was launched only in end 2023. The fund also launched S US dollar class and S Sing dollar hedge class recently in February 2025. Both A and S share classes charge a 1.6% management fee. Adding other expenses comes to around 1.93% to 2% TER. This is just a little higher than the usual 1.5% typical fee for global equity funds. Up to 60% of the management fee can be paid by Neuberger Berman to distributors as trader fees. The fund allows for up to 5% subscription fee to be charged for A share classes, though I think anything more than 2% for mutual funds is excessive. The S classes are created exclusively for select distributors only, and are closed for subscription in April 2025. The S classes differ from the usual A classes by having 0% subscription fee, and instead comes with a contingent deferred sales charge or CDSC, which basically means investors need to pay a redemption fee instead of a subscription fee, and that fee is tiered according to how long the fund is held, from 3.5% if redeemed within the first year, to 2.5% within the second year, to 1.5% within the third year. After 3 years of holding the S class, it will automatically be converted into A class. While having no subscription fee sounds great for investors, and the CDSC goes away after 3 years, I am personally not a fan of CDSC fee structures because it impacts liquidity when most needed. Imagine market turns really bad and you have to exit the investment early for urgent cash needs. In such a scenario, the fund is already in a loss because of market conditions, and your redemption amount is further reduced by the CDSC fees. So that's definitely not a great situation. Therefore, investors should always make sure you fully understand the CDSC fee terms and your own liquidity situation when you come across such share class offerings. While the marketing materials advertised the strategy was incepted in 1991 with 34 years of proven track record, there is no information readily available on the original strategy vehicle or its track record details. What we have here is the Neuberger Berman Global Equity Megatrends Fund that was incepted only in 2018. That gives us about 7 years worth of track record to assess. The fund fact sheet provides cumulative performance chart and time period performance data, where we can see the fund has been kind of trailing behind the benchmark over the years, which makes it rather unattractive to investors. But remember, the fund portfolio is actually more like a global small and mid-cap exposure rather than a large cap exposure. So perhaps we should not evaluate its performance against MSCI World Index. Let's use Morningstar to find out more. Looking at Morningstar category-based performance, the fund actually has a very decent track record being in the top decile for 3-year and 5-year periods, mainly due to very strong returns in 2022 to 2024. I don't have details on the peers in the category though, so I'll do my own comparisons in the performance chart. Let's first establish where the fund sits between the global large cap and small and mid cap space. Here is the performance chart since fund's inception from 2018, comparing against iShares MSCI World ETF to represent the global large cap benchmark and the MSCI World Small and Mid Cap or SMID Cap Net Return Index. We can see the fund performing similarly to the SMID Cap Index in the first few years, then progressively increased outperformance from 2021 onwards. If we look at nearer term with the 3-year chart, the fund actually has delivered about the same returns as the iShares MSCI World ETF, and still clearly outperformed the SMID Cap Index. This shows the fund does have some decent alpha returns in recent years from its SMID Cap focused portfolio, in order to return similar returns as MSCI World Index. How then would the fund look if we treat it as a global small cap fund? Here, we again use the since fund inception from 2018 to compare against some of the popular global small cap funds from Allianz, Aberdeen, BlackRock, Columbia Threadneedle, and Janus Henderson. It can be seen that Neuberger Berman has quite comfortably outperformed these funds except for Janus Henderson. Looking again at nearer term 3-year chart, the same is observed, where Janus Henderson and Neuberger Berman outperform the rest by a clear margin. So this suggests it is feasible to use the Neuberger Berman Global Equity Megatrends Fund as a small cap play in investors' portfolios. However, the main purpose to consider this fund is to participate in profitable market trends. So let's also compare the fund with some of the popular global thematic equity funds from AB, Allianz, AXA, Capital Group, Fidelity, M&G, and UBS. Here, we can see big differences in the performances of the funds, showing it is not easy to identify strong trends correctly, and also it is not easy to identify profitable stock ideas to represent the trends. Many of the funds here went through a strong growth in 2020 to 2021 during COVID period, then collapsed thereafter and struggled to recover, suggesting either overly aggressive bets or issue within the investment processes to review the trends and make timely adjustments. Among these funds for this 7-year period, Capital Group is the best performer, with Neuberger Berman trailing behind slightly. If we shift to nearer term 3-year chart, Neuberger Berman is actually the best performer in the group. While each fund here has its own list of teams to follow and the underlying portfolios can be very different, the strong performance of Neuberger Berman Global Equity Megatrends Fund shows that this is certainly a fund worth considering if you are looking for a product that identifies strong market trends and picks profitable stock ideas. With that, let's summarize our findings. Neuberger Berman is a US-based asset management firm with a long heritage and a diversified product range. I particularly like the 100% employee ownership structure as I think it ties fund manager and investor interests together closely. The fund is managed by a small dedicated investment team of 4 highly experienced managers, providing stability in the investment style and strategy. The investment strategy provided is generally clear, and the track record shows both the identification of the teams to follow and the resulting stock selection process are working well. The resulting portfolio that is highly concentrated and mid-cap focused differentiates itself from some of the peers. However, this also reflects that the benchmark used, which is MSCI World Index, may not be that appropriate for the fund. Performance of the fund looks decent when compared to other global small-cap equity funds as well as other global thematic equity funds. In conclusion, I think the Neuberger Berman Global Equity Megatrends Fund is not suitable as a core global equity play, given its actual portfolio exposure. However, it looks appropriate as a complementary holding on top of core global equity positions, as its mid-cap and thematic focus approach can provide risk diversification and potentially provide a differentiated returns source in the investment portfolio. This concludes my absolutely biased comments on the Neuberger Berman Global Equity Megatrends Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.